Real estate values bouncing back this year, and with the Fed widely expected to cut rates or begin cutting rates next month, where are property investors placing their bets? Well, joining us now is Kathleen McCarthy, Blackstone Global Head of Real Estate, who runs the world's largest real estate portfolio by assets. It's so great to have you back here on set. Welcome.
Thanks for having me.
The last time you were here in April, you talked about the fact that it seemed like real estate was bottoming. Where are we at now in that cycle?
Well, we are still seeing that pulling through, and we've been very clear on that, even publicly, starting with our earnings call in January, talking about how we saw real estate values bottoming, really because cost of capital was coming down. And you don't have to wait for a rate cut to see that spreads are compressing. You look at the AAA portion of the capital structure, they've come in 50 to 60 basis points, 50 to 60%, since their wides in 2022. And so kind of with that, we have really tried to go on offense, not wait for an official all clear signal, but really use this moment where the environment is more capital constrained, where we see a lot of dislocation in the market to really position our clients in interesting large transactions in particular in our favorite sectors. And so most recently, that was the $10 billion take private of a company called Air Communities, a housing investment business that's really concentrated in urban markets, high quality product. But there have been all kinds of opportunities, including in partnership with public companies. We did a $7 billion joint venture with Digital Realty, where they had sites in Europe and the United States, but not the capital to really catalyze those opportunities. And we were able to come in as their partner and do that.
And I do want to get into housing. I want to get into data centers, some of these other areas that you're very focused on right now. But first, just one more question on the macro, and that is, okay, Fed's all but short to start cutting rates next month. But we don't know how many cuts. We don't know over what period of cuts. And what I do wonder is the risk still out there more broadly, looking across real estate and the subsectors, for this wall of debt we've been talking about that is going to have to be refinanced to still hit some issues here in what's left of 24, 25, et cetera?
Well, I think you are going to continue to see bad news. We think about it kind of like the aftershocks of an earthquake. But I think what we have to all focus on is that there's actually a tremendous amount of resilience in the economy. We see spots of softening, places where consumers may be impacted. So we're seeing that pull through into hotels or leisure businesses. We're certainly seeing kind of job growth and wage growth flatten out. But what we would expect to see is that you've had this experience where with the sharply higher cost of capital, higher construction costs, you've seen a sharp fall off as well in new supply. So in the sectors that are our favorites, logistics or rental housing, new supply is down 70% in logistics, 40% in multifamily housing when you compare that to recent peaks in 2022. And so while you're going to continue to hear bad news, I think a lot of it is going to be isolated to the office sector or to transactions that were done, just with too much leverage for an environment that we're in today.